Alrighty, we are live. Welcome everyone. Welcome to uh to another edition of Market Update Time with your host Johnny Howe. I hope everyone has had a good day in the markets, and we're going to be going and having a look at what's going on right now in the markets. I'm going to be looking at the small picture, be looking also at the bigger picture as well too. We're going to be going a bit more detail in this session today and really diving deep into what's going on right now in these markets, and I'll be focusing on the metals and also obviously the indices as well too. Plus, be looking at some stocks and be going from there. So before I do start, guys, let me start off with the typical disclaimer, and that is, do not place a trade based on what you're seeing in this session today, because trading is risky and it can cause substantial financial loss. Trading is not about being right or wrong with the markets. Trading is about how consistent profitable trading is all about how consistent you can be you can be at sticking to a proven trading setup. And that's where you should be focusing on first. So this here is just educational only to help you become a much better trader. And if you haven't done so yet, guys, make sure you go down to johnsflashsale.com to grab the $7 flash sale that I'm running to my Grab the Markets by the Balls trading course there. Now, before I do start, guys, as I said before, I'm going to be looking at the markets today. I'll be looking at the stock, Dow Jones, S&P, stuff like that, and giving you a guidance on what's going on right now and moving forward from that there as well too. So that's what I'm going to be focusing on in today's session, guys. So let's actually get straight into it right now. And let's actually get straight into it. So what I want to do is I want to be looking at the small picture and also the big picture here in this session today. And what I mean by that is, let me bring this over here. What I mean by that is I want to be looking at, let's go start to look at this chart here. We're going to go to the Dow Jones. And I've been doing some analysis on the Dow Jones and looking at what's going on right now. So let's start with the bigger picture here. And I know some people don't like these black bars on the charts. You can use that, or you can use this here. Like, it doesn't really matter. Sometimes just reading the black bars helps me get a gauge on where we're at and what's going on right now, and so on and so forth. So if we can see where we're at right now, we can see if I bring up these long-term trend lines through here. Let me delete this thing through here. Let me delete that through there. All right. And now let's bring up our weekly chart here. So you can see what I'm looking at here from a weekly chart perspective. Okay. A weekly chart perspective, as in like what's going on through here. And as you can see, right, that we can see that that what's going on right now, we can see that this overall it's sort of in this wedge, isn't it? And you can see that this Dow Jones chart right now, we had this major support level down through here. And once we squeeze it right up, we can get a good gauge on where we are at. Now, the question you got to ask yourself is, sometimes just because we break a major trend line, doesn't mean it's going to be the end of that move. And you'll see what I mean in a minute, because the Nasdaq and the S&P pretty much look like back here on the Dow Jones, right? Where we broke a major trend line, come back up, we rally back up to that trend line right now. Are we likely to fail on those S&P 500 and the Dow Jones? So that's the question you need to ask yourself there. But moving forward, as we can see, right, we have this down point through here. We have this support level through here. And we can see how this market has really sort of just found a lot of support through here and a lot of support through. And we can see how the market actually came back above this level here. And now it's actually finding a lot of support, but we're squeezing up into sort of this triangle pattern now. And it's squeezing up and squeezing up. And if you take everything off the screen here, you could see this be more like, this could be like a pennant, if you call it like a pennant, or it could be like a bull flag or something like that. What I mean by that is, if I go over to the daily chart now, let me see if I can, I'm going to delete everything off here. On the short-term basis, if I bring up, say, the last, say, 6 months here, there we go, last 6 months, then let's actually bring up just a little bit more. Then what we can see, right, we can see how this has been this level through here has definitely been a resistance level through there. We're definitely getting some sort of a wedge through here, as you can see, but we've also got a nice move up from here to here. So this could be some sort of this could be some sort of bull flag pattern. This could be some sort of bullish flag pattern in the market. And so right now on the Dow Jones, that is, as you can see, it had a nice run up, and now we're just going sideways, squeezing out, squeezing out, squeezing out. We're squeezing into this another triangle pattern here. And again, some people don't understand this about trading, but when you get something like this, especially like this, say on the Dow Jones, wherever the breakout is going to happen, wherever the breakout happens, that's where it's likely to follow through, right? Some people say to me, like, some people have said, oh, yeah, good on you, John. Yeah, if it breaks up, it's going to keep going up. If it breaks down, and so on and so forth. Well, we need to wait for confirmation, right? We need to let the market tell us where it's likely to go, and then we follow that. So for you guys that had one comment at least on my video, talk about the gold, because I was talking about gold, and gold had a bear flag. And I said, well, if gold continues up, that bear flag is going to be avoided, and we're not going to have that bear flag, and they're probably likely to continue up because we're breaking out of that bear flag. But if we go down and we break down and we break below the low, then now that's a signal we're now likely to continue down. It's waiting for that confirmation, as I was saying before, in the markets there. So as we can see here, right, on the short term on the Dow Jones, that we're getting some sort of a bull flag formation through here, and we're just resting through here. Now, it's important to understand how the markets work and what tends to happen. If we go and what's happening right now, when we get a triangle pattern / sideways movement / whatever you want to call it, a pennant, that this is now what? This is now resting, right? The market's resting because we've had a lot of move up. Now the market's resting through here. It's now building a lot of energy to start to see, to start to see a lot more, to see it's building energy to go for another run in the markets. So if we do get another break up and out, and especially if we start to get a break above these levels through here, especially these levels through here, it's the 26,000 level, then we're now likely to go for another good run in the markets. And maybe, just maybe, that's the start of the run of where we actually start to see a run towards 29,000, because that is a possibility, guys. This is actually a depending on where the breakout is depending on where it's likely to go, right? So we have a nice run, got all this sideways here. If we get a depending on what we get here, okay, and this is where successful trading is all about waiting for confirmation instead of you preempting. So if we get a nice nice breakout candle or nice breakout bar that opens here as an example and rallies right back up and gives you a nice little break above like that, well, that's a very, very bullish sign, right? Because the market goes through a couple of different phases. This here is what's known as a price phase, where the market is moving, right? The market is moving. And then when we start to go sideways like we are now, this is what's called time. Time is like energy, right? It's like you resting. It's like you sleeping. When you sleep, you're building energy in the body, and then you wake up and you're ready to go to the gym again, so to speak, right? You rebuild it. So we now if that breakout is happening now, this is a very high probability, if we do get a candle like that, that this is now starting a new what? Price phase, because it goes through price and time, right? Now, sometimes we can get two different price phases. When that happens, it generally means it's a bit of a V-bottom action in the markets. So you can see how the markets had a big price phase through here. Price phase simply means that the market is moving in a direction. So we had a big price phase moving down through here, and then we had another big price phase moving up. So when that happens, it's generally an end of trend move. Oh, it's generally a trend reversal move, right? Price move down, price move up. Now, how do you know that they're both are price phases? Because they're both strong. A price phase is when the market moves up strongly. A time phase is generally a pullback, which is weak, which is volatile. It's not generally strong trending. So, but if we get a strong trending up, which is price phase here, and then we get a strong trending down, which is price phase here, well, guess what? Now we have a bit of a topping action. This is the topping action here, and this is the bottom action here. So with that being said, and as you can see by looking at this chart, this could also be, if you're looking at this, one big massive inverted head and shoulder formation, which is looking really, really nice, by the way. Right? So one big massive inverted head. Now we're looking at the last, say, 6 months here. Are we looking at the last 6 months? Well, last 6 months, maybe even go down to 1 year. That's okay. But as you can see, we're looking at the short term there. We're looking at the absolute short term there. But if I bring up my longer term charts, bam. Oh, did I I deleted everything off the screen, didn't I? I did too. Damn. Anyway, so that's what we're seeing there on the short term there. Okay, on the short term, this actually could be some sort of big, massive head and shoulder formation in the markets here, right? And then that's that resistance level there, but that's that 26.5 that we've been going sideways here. So this could be some sort of big head and shoulder formation, which is a continuation pattern in the markets. So that's what we're seeing there right now, guys. On the Dow Jones, be very careful if you're trying to pick a top right now and trying to short the market, because this is actually a very bullish pattern here. Now, remember, guys, if it breaks up, if we go back to my good old Snagit tool here, if it breaks up, then that's now likely to be the start of that price move. But because we haven't really been trending really overall, if I go back to my other chart here and go back to my weekly chart here, because we haven't been trending really overall, we've just pretty much been going sideways, as you can see, for the last, say, year, maybe year and a half. There's no true strong trend here. So when we're looking at that there, if we see that there's a nice red candle here that opens here and breaks down like that, like a very nice big breakout candle, well, guess what? Then that could also be now the start of a nice move down, at least a 50% move of this entire move up. We're now likely to see some downside, but it depends on how strong that breakout candle or breakout bar is. We need because we've had all these small little bars going sideways through here, we need a good strong breakout bar either way to tell us we're now likely to start moving in that direction, at least on the short-term basis, because we're talking about the daily chart here, right? It could go in that direction for a week, and then obviously we need to assess what happens at that time and so on and so forth. But looking at this chart here, right, we can see how this could be one big, massive head and shoulder formation through there, as you can see, right? And if I bring up my longer-term trend lines once again, that longer-term trend line that's coming into play right now, right there, right there. That longer term trend line is also now going inside of where we are there. So I won't put that in. I'll just focus on the short term there. So that's what we're seeing there right now. And if you want to bring up the candlestick charts and see what it looks like on a candlestick chart basis, because I know some of you guys love the candlesticks, then this is what it looks like on a candlestick basis, right? Like there. So as you can see, right, the candlesticks, it's really weird, right? Like whenever I'm reading the charts, whenever I'm trying to get a gauge on what's going on in the markets right now, I look at the candlesticks and like sometimes they can look very, very messy. But if I bring this chart up, as you can see, right, it just looks very clean. There's not a lot of red and green colors because I'm just trying to focus on the overall patterns that the market is giving me, not the individual bars, and trying to see where are we right now? What sort of phase are we in? Are we in a price phase or are we in a time phase? If we're in a time phase, it's very unpredictable, right? And that's what we're doing right now on the Dow Jones. So that's what I'm seeing there on the Dow Jones, guys. And once again, if we do break above that 2650, if this is now a resting phase to go for another big bull run, then if we start to break above 2650, then the 29,000 target, 29,000 on target is my for the Dow. But we need to see a breakout first. When the market breaks out, then that target is likely to be in soon. So moving on to the S&P 500, right? And if I move on to the S&P 500, the S&P 500 is doing something really, really different here, and it's sort of making me sort of like, what's really going on here with these markets through here? So the first thing that I do want to say is, let me actually bring this up through here, right? the first thing I do say is, as you can see, that with this trend line here, right, with this weekly chart, we've had this big long-term trend line come up, which is this point through here. We've now had a retracement that's actually rejected at this point here as well too, and we've been going up for quite some time on the S&P 500. That's where it's really interesting to see what the S&P 500 is doing compared to the Dow. It's like, wow, this is really interesting, because the Dow has been going through a resting phase, which looks like it's going to go through a bit of a breakout soon. But the S&P, which if you go back in history, generally follows along really, really closely to the Dow Jones, is not doing what the S&P, what the Dow is doing there. So we can see that's through there. And if I bring up, say, just a closer view here, and I bring up, say, the last 6 months here as an example, you could possibly see that there's a bit of a bit of a support line going on like through there. And so we're in a very, very nice, strong upward trend through here. And so and the reason why it's very hard for me to see, right? Like if the S&P was exactly like the Dow Jones, oh, I'd love that. But now it's like, what's going on here? Are we likely to continue this upward trend, and so on and so forth? And I'm just looking at this here. Now, what I'm looking at right now, guys, is how far away is it from the moving average? Because sometimes when it's too far away from the moving average, it can tell you what's going on there. But no, there's nothing really going on there. Look at that weekly chart once again. So we made this nice higher high. We've had this big move up. It's really, really interesting to see what's going on right now, guys, in the S&P 500. And same for the Nasdaq as well too. So this is the S&P 500. Yeah, it's a tricky one. It's a really, really tricky one, because we're not. And I say tricky because we've been going up for quite some time. There's going to come a time where the S&P is going to go through a bit of a resting phase soon. You know, a nice decent pullback, even a sideways phase, like the Dow's been doing, right? Like this Dow's been doing through here. So it's really, really, really interesting to see. And that's why I said, guys, just because we have this head and shoulder formation here, or potential head and shoulder formation, if we do get a breakdown, like a nice big breakdown, we're probably going to see a run back down towards these lows through here around the 24,000 to 23.5, somewhere around about there. And the S&P 500 will then fail through here and then also see a pullback as well too. But that short-term pullback could also be just another pullback and then a continuation move to the upside. So due to the fact that we actually didn't see a lot of movement to the upside today, okay, we got this nice big strong upward trend through here, but we didn't see a very big bounce off this level through here. Tells me that we could be getting ready for a turnaround here, but you don't want to be trying to guess that or anything like that. So again, guys, you can hear it in my voice. There's a lot of and ahs with S&P, because the S&P has been going up for quite some time now, and it's due for a rest, right? It's due for a sideways. It's due for a pullback. That's how the markets work. So it'll be really interesting to see whether we do get a breakdown below this channel. If we do, then we could see some sort of at least a 50% retracement out of this level here. So this level, I'd say this level through here would be indeed a level of support and support of where the market is likely to run to. If we do fail through here and we start to have a bit of a pullback, which indeed would turn around and have the Dow Jones go down as well too. Moving on now through to the Nasdaq. The Nasdaq's doing pretty much something very, very similar, where as the S&P 500, and let me just delete everything off the chart here for a minute. I'm gonna go to this chart here, and as you can see, if I draw my trend line up through there to there, you can see how, not quite, right, from there to there. And as you can see, right, the Nasdaq has definitely hit this other side of this trend. And look how much we've been going up. And this is the same for the S&P. We've been going up for quite some time, and so is the S&P, but the Dow Jones is holding there. And that's where I've been saying, guys, like, you know, we could get a break up. If we get a break up, then that's now likely to be the start of a new price phase. Or if we get a breakdown out of that Dow Jones sort of situation, then the Nasdaq and the S&P is going to follow, and then we're likely to see some sort of a once again, some sort of a 50% correction or a pullback or something like that in the markets, which I'm actually expecting, by the way, especially on the S&P and the Nasdaq. It's really weird that they've been going up for quite some time. They're due for some sideways phase. They're due for some sort of a pullback in the markets, because that's, once again, that's how the markets work. You can see how that works time and time again throughout the markets here. So I am definitely veering towards more of a pullback, more of a breakdown than anything else, only because of what the other indices are doing. And same for, and if I draw that through there, we can see that that's that short-term level through there. Let me bring up the candlesticks here for you guys that love the candlesticks. And you can see how it's not really, we're not really pushing up higher today. So it'd be really interesting. The S&P and the Nasdaq are doing pretty much the same thing. They're struggling where they are right now. And so, yeah, so if we do fail through here, then we're likely to see some sort of a pullback. If we go to our other sort of a weekly chart through here, then we can see that there's major support level down through these levels here around that 7,000 level. If we bring up a Fibonacci tool from the low through to the high, you can see also that, go back to the daily chart now, you can see that that 50 to 60% level goes right inside of that 7,000 level. So if we do fail through here, same with the S&P 500, if we do fail here, then we're now likely to see a move down towards the 7,000 level. So, and that's what I'm actually veering towards more, only because the S&P 500 and the Nasdaq are all doing the same thing, but the Dow is sort of holding through here, once again with this potential sort of head and shoulder formation in the markets there. So that's what I'm seeing there. my software's not loading now. Good on you. So, guys, the breakout is going to tell us where we're now where we're likely to go. If the Dow breaks down and the S&P and Nasdaq follow, then we're now likely to see a lot more bearishness in the markets. In the markets here. So we're still waiting for that that confirmation. But if we break up, then we're now likely to see some more upside from there. That's what we're doing. We're waiting for that, for the market to tell us, because we're still stuck in that range. Why isn't my software loading now? Come on now. You can do it. Bam. Bam. Oh, I'm getting one chart loading. Come on now. I want to have a look at silver and gold, 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 gold and silver. Ha, we have the light. We now see the light. So there we go, guys. There's a bit of an update on that there. The conclusion is right now, depending on what happens, depending on where the breakout is, right now we're still stuck in this time phase, which is the sideways phase. The market's in indecision. Wherever the breakout happens, that's likely to be the confirmation to see a lot more downside to come. And why is my software not? You know what? Let me reboot my software here. Let me reboot my software. So while that's rebooting, let me go through the, oh, look at the chat box. Jesse B, my man, Jesse B. You got to start being very positive and optimistic about the future, my man, and about what's happening right now in the markets. Stop looking at the markets as half empty or half, all that sort of stuff. So Jesse, you said also the news is so funny. Yesterday, it was the end of the world, your inversion curve. Now everything's okay. So Jesse, if you keep focusing on the news, then that's what you're going to get. Okay, that's what you're going to get. But Jesse, please, man, it's important that you look at life as, you know, have a positive look on life. Have an optimistic look in life. Don't be trying to you know, yeah, don't try and have a negative look on life. There, it's so important to have a positive look on life, and then ask yourself what can you do. So that's really, really, really important to understand there. Because there are amazing things happening in these markets right now. Let's go have a look at silver and gold here, guys, for a minute. I want to look at gold here. I'm going to squeeze gold up as much as possible. Actually, no, let's go to the GLD, to the G, to the G, to the G, to the G, to the GLD. So with the GLD, guys, the overall longer term picture is still pretty much intact there, meaning like we've got this long-term trend line coming down through here, which is around that 130. We have this other short-term trend line coming up through. We possibly could have something with that long-term trend line possibly coming down through there somewhere, and we're sort of bouncing off this level through here. Once again, the gold right now, the gold market right now could be just forming some sort of a. It's indecision right now on the gold market. This long-term weekly chart is still compressing up. This major bottom. It could be a bottoming pattern. I just want to say major bottom pattern. This major pattern through here could be one big major bottoming pattern. And if it is, guys, if it is, because we spent so much time just going sideways, not really trending in a direction, then we're now likely to see a nice move in the direction. So it's really interesting. It's like gold is very, very, very lackluster through there. If we go have a look at the short term. The short term on gold right now, let's have a look at, say, the last 6 months, then we still can see that there's that bear flag just lurking behind here. And what I mean by that is that if I bring up the last, say 3 or 4 months, there we go. Actually, you know what, let's go to here. That's that longer term chart. Let's go to the short term. All right, so this is what's going on. That's that we had that short-term channel through there, as you can see. So that was definitely through there. All right, we definitely had this short-term channel, and now we can see that there's something going on through there. Meaning that's that next low through there. This is the major low through here. So we don't need to worry about that channel anymore. We don't need to worry about that anymore. And as you can see, right, we definitely have that going on through there. We definitely pick up that point through there, pick up a lot of points through there, and then we definitely pick up a lot of points through here as well too, and we put it up through there. And what I'm looking at here, guys, is I'm looking at the closes of these bars as well too, because the closes are the most important price to the markets. So when I'm drawing my trend lines here, if I open up, you can see how this bar through here, or actually let me bring up the candlestick so you can see it a bit clearer. Right, you can see how, actually, you know what, forget that. I'll just do it here. You can see how the closes, right, like this bar here closed above it, closed right on it, and so on and so forth. So I'm trying to get this trend line to where it closed, because if I get that through there and that through there, so and that level, that line through there would be definitely an important line if we did start to break down. So this is where gold's really interesting right now. We're going through a bit of a time phase, a bit of a really long-term sideways phase through here in gold. And in fact, if I actually bring up the gold chart itself by looking at that, this is the gold chart itself. Let me delete everything off the screen. And let's just go to the actual gold chart itself. Looking at the short term here, we can do the exact same thing. All right, so that through there. I'm just trying to get as many touches as possible, but probably on that line through there and that line through there. That'll be the line that I'm looking at once again, because it hasn't closed below this level through here ever. and we're still getting this move where we had this move down, we created this lower low, and we're still getting this lackluster buying period through here. So the same for the Dow Jones and the S&P 500 is like, where is it going? Wherever we get the breakout, that's where we're likely to see a move. Are we now likely to break up and out of this sort of short-term channel here we're getting right now, right here, which is known as a bear flag, right? Are we likely to get a break up and out of this thing? If we do, then that's the confirmation to say, okay, this bear flag here is not going to be a continuation on the downside. It's just going to be, and we're going to get a move back up to the upside. And that's with these bear flag formations, you can get either, and that's where it's like same as the indices right now, right? We need to wait for a bit more confirmation to see where this market's likely to go, and then we jump on those coattails and have a bit of a ride. Never preempt the markets. So what I'm talking about there is I'm talking about is that if the market gives you a bear flag formation through here like that, as an example, market gives you a bear flag. Well, there's been so many times, and let me just delete that, and I'll just use the actual bear flag here. There's been so many times like you'll get this here, but then you'll get a nice strong breakout candle, like strong breakout bar like that, breaking out of the bear flag, which generally speaking is a downward movement. And if you get that sort of bar, then now we have a high probability of now continuing in that direction, right? So this is what's called waiting for confirmation, waiting for the market to tell you instead of trying to preempt or think you know what's going to happen. And the same for the downside as well too. If we get a nice big strong down candle like that, like a big strong candle, because we've had all these small little candles or small little bars through here, small bar, small bar, small bar. If we get a strong breakout bar in either direction, that's going to be confirmation that now we're now likely to see a lot more movement in that direction. All right. So it really is a matter of where is it going to break and waiting for the market. Sometimes the market is giving you a bit of an indecision and you look at the market, it's like, okay, I have no idea, but I'm going to let the market tell me what it wants to do. And then I want to jump on those coattails. Think about us as the birds, right? You have the lion and you have the zebra. The lion comes in and rah, attacks the zebra, rips it open. What do? We're the little birds that come in, and the zebra is like, the lion is like this big candle, right? The lion comes out, kills the bird, or kills the zebra, whatever, and then we're like the little birds that come in, and then we jump on the coattails a little bit, and then we nick off to our bank account, say thank you very much, and we go and then we go do it again. You can never preempt the market. And especially when the market is gone through what we call a time phase, where you're having these small bars, small bar, small bar, small bar. It's very same through here, right? Look at this here. Small bars, all these small little bars, strong breakout bar, and we had a bit of a follow through. Not a strong follow through, but hey, that's what the market gave us, and that's all that move happened, and so on and so forth. So that's what I'm looking at there with gold right now. It's like, where are we going to get the breakout? Because if we do break up and out, that's going to be confirmation that we're now likely to see probably a run back up towards these highs back up here of that 1360. But if it breaks down, and like I've been saying before, especially if we start breaking past this 1280 level, then I see this thing down here at 1200. So it's not a matter of, because a lot of people say it's not a matter of, well, if it breaks up, then we're now likely to go up. It's like, no, duh. It's a matter of, okay, we're now in a period where this market is developing this sort of formations, this formation through here. Depending on where the market tells us where it wants to go, then that's where we need to follow through and focus on that alone. Please don't try and preempt or think you know where it's definitely going to break out, because no one does. And successful trading is waiting for confirmation and then jumping on that. It's like with your trading setup, right? Hopefully you have a trading setup and a confirmation candle or a confirmation bar that you look to get in on. And that confirmation bar, when you get on it, then guess what? Then when you get on that, now the next level is that you're going to have a win-loss ratio with that trading setup. You're going to have, some of them are going to be profits, some of them are going to be losses. And then And then it also goes down to how do you manage your trade so you don't let a profit turn into a loss, even if it's a small profit. I prefer you taking small profits than taking big losses by managing your stop quite tightly there. And so that's what we're looking at there in the markets there, guys. And that's where you want to be really, really focusing on here and not focusing on the news. Let's go have a look at silver. Silver's actually the silver market has, again, pretty much the same sort of thing that's happening on gold. But if we have a look at the short term here, we're getting, again, some sort of a bear flag formation, and we could be once again rolling over here depending on where we get a breakout, guys. Wherever the breakouts happen, once again, that's going to give us a bit of a confirmation that where we're now likely to move forward. Okay, and now once again, guys, it's so important because some people see these videos that I do or these sessions that I do, and they're like, oh no, duh, John, if it breaks up, then it's likely to go up. It's like, no, it's not that easy. It's just because we're in this period of time where the market is sideways. It's having a bit of a time phase, which is resting, which is volatile, which is small bars, which is indecision. We're not getting a true strong signal. So we need to step back, wait for the market to tell us what it's likely to do, and then start to jump on those coattails. Remember, guys, we're the little birdies. We're not the big lions. We wait for the lion to tell us what's going on, and then we jump on that and take a little bit and run away. We're not the lions. Remember that. And even the big lions like Ray Dalio, they don't even know what's going to happen. So by looking at this here, once again, guys, that's what we can see clearly. Or if we have, it's actually more of a that's actually more the trend line there that's happening through there. So we don't need that anymore. If we go, and once again, we're just using this here, right? We're using this through here. So once again, this bear flag, depending on where it breaks out, is where we're likely to see. But depending on not only where the breakout is, but it's depending on the strength of the breakout. That's so critical. It's not just the breakout, but the strength of the breakout. I'll give you an example of what I mean by that. Let me go back to the gold chart here for a minute. All right, and I'm going to go back to a trade that I did last year on gold. And look at this here, right? So let me open this up here. Actually, let me just use the candlesticks here, because you guys love the candlesticks. Love the candlesticks, don't you? So if I go back to here, right, let me open this chart right up a bit more. Right, so look, this is what I'm talking about, like a strong breakout, like a strong, this was actually a trade that I did last year. And as you can see, right, so we had, what did we have? We had this period of where? Small bars, right? See all these small little candles through here? Small candles. And then we had a nice, good, what? Strong breakout candle. Now, obviously, we had the trend as well, too. So we had a nice trend going down. We had these small candles, and then we had a strong candle breakout. What does that mean? We're now likely to see a nice move down. Now, not every day or not the very next day, but it now gives us what? It now gives us some sort of confirmation that we're now likely to see the market move in that direction, especially if we can start to what? Get a close below the last low through here, which I'll use this line through here. Right, especially when you get a nice close below the previous low, as you can see this candle did. That was the sign we're now likely to see some movement down in that direction. How long is that movement? We don't know. It could be a week. It could be a month. It could be whatever, right? So that's what I'm saying here, guys, about waiting for confirmation. We never know. But if the confirmation is a nice, strong candle breakout, meaning like it's very solid, it's not these small candles through here, then we're now likely to see some movement on the downside. So for you guys that get your knickers in a knot about me saying, if it goes down, it's going to go down. It's more than that, okay? It's way, way, way more than that. Just like we're seeing through here. So we want to see, once again, we want to see if we do see a nice, good, strong breakout candle breaking below these lows through here, as I was showing you there on gold for a minute ago, then yeah, we're now likely to see probably a breakdown towards $14 again on silver. But also, once again, is that we don't know where it's going to confirm, right? So we need to be what? We need to flow like water. If we get a strong breakout candle out of here, then my goodness, we're now probably going to run back up towards $17 out of that thing. Meaning a very strong breakout candle, because we're probably going to break the $16 at that level and then continue running back up. So, but we're still getting this lower low, strong movement down, bear flag formation. So it'll be really interesting to see where this confirms and where we do get that strong breakout in the markets there. So that's what I wanted to share with you guys today, a bit more of a detailed breakdown on the markets and also the importance of waiting for the market to tell you what it's likely to do instead of you trying to preempt it. Because when you try to preempt it, you're trying to be smarter than the markets, and you're trading with your ego, and your ego will always lose your money. That's why with my trading system, I have the setup, so I know exactly what I'm looking for on the chart for it to be setting up. And once I have my setup in place, then I'm looking for a confirmation candle or a confirmation bar. I know exactly what I'm looking for on the bar or the type of bar I need, and then I enter on that. Then I know when I enter on that trade that my system has a win-loss ratio, even though it's 90+%. Every now and then I'm going to have some losses, break even, some losses, and so on and so forth. But then the next step is how well I manage that trade. And as you can see, right, it's a step-by-step confirmation. The setup with a confirmation, when you get into it, understanding that this could also be part of that losing trade. So you need to understand that with your risk management. And then thirdly, never let a profit turn to a loss. So as soon as you get into profit, right, bring your stop up to protect that. Because there's been so many, one of the best things that I've done for my trading career has been aggressive with my stop. And yeah, especially when I'm trading the Forex and futures markets there. When I'm trading options, it's a little bit different, but that's what I'm looking through there. So what I want to do now, guys, I want to go through the chat box now. Just give me 30 seconds, guys. Give me 30 seconds. I'm going to go, and I'll be back in a minute, and then we'll go through Q&A. All righty, traders. Let's go. Actually, you know what? Let me bring up this. I'll bring up this slide here. This one here with all the markets. Let me go through the chat box now. If you have any questions, guys, put them in the chat box. Inverse Money Maven says inverse head and shoulders typically takes place after an extended sell-off. You also can get that in the middle of the range where it is right now. It doesn't have to be after an extended sell-off. But as you can see, right, a head and shoulders is a head and shoulders there. What I saw today was a gap higher. Yep. SPY. Yep. For me, it's clear that the market will be bearish because it needs to correct. Yanai, I know you have a lot of bearish positions on the markets right now, so that's what's making you say that. Be very, very, very careful of trying to, because I know you have put options right now, especially on the banks and so on and so forth. So it does look like we're likely to get some sort of a pullback out of the markets, only because of what I said before about the S&P and the Nasdaq. But hey, the market can surprise you, and that's why we need to keep an eye open, be flexible, be open, flow like water with the market, because the market can do whatever the hell it wants to do. And there where we need to flow with it, you know what I mean? And not be preemptive. So I know that you have a lot of bearishness in the markets, and even though I did a video saying bank bloodbath and so on and so forth, again, that may not happen. Money Maven, draw horizontal line on the triple top. You will see the back test. You will see the back test today. Okay, looks like a good short on XAU 4-hourly chart. 4-hourly chart? Let's have a look here. The 4-hourly chart. Possibly. The 4-hourly chart's still giving us a nice little high lows through here. So the short term on this 4-hourly chart is definitely stepping higher. It's not until we break down that we're now likely to see that. So yeah. I think, John, that the weekly tells a story. For me, the market is more bearish than bullish. I know why you're saying that, because your bias is bearish right now, because your position sizes are all bearish right now. And so therefore your opinion, that opinion that you're deriving from there is based on basically what you want to see in the markets, because that's where your position size is there. And that's where you want to be really careful as well too with that. I understand that I understand that you're short a lot of the banks. In fact, actually, let's go have a look at some of the banks today. See what the banks did. Let's go to JP Morgan. What the hell was that? JP Morgan. I do see JP Morgan actually continuing down a bit more, actually, or continuing down. So JP Morgan is holding there. Let's go to this weekly chart. Yeah, so I do actually do Goldman Sachs. Goldman Sachs, same sort of thing as well too. We're just holding here, aren't we? Once again, guys, especially this Goldman Sachs here, we get a strong breakout candle, then it's going to be a nice little. I'd probably trade that then at that time if we get a strong breakout candle, depending on some other factors as well too with my trading setup. I know your Bank of America. Okay, see, yeah, pretty much a nothing day as well too in the markets there. Let's go look at that weekly chart. You're still getting a lot of bearishness. Actually, we came down and closed that gap on Bank of America. Looking at, and I know. I know, Manai, that you're also what's that other bank I'm thinking about? Golly, I've lost my mind. What's that other bank, guys? What's the other bank? Oh, what's the other bank I'm thinking about? Oh, it doesn't matter. So they're all looking pretty bearish there. Oh, one thing I forgot to mention, guys, was the Russell and so on and so forth as well. The thing that I was looking at with the Russell here is that the Russell, this Russell formation here could be what? Could be some sort of could be some sort of a bullish flag formation, couldn't it? So even though we're starting to slowly stair step here, it's a very weak stair step, isn't it? So we've got a nice move up from here to here. This could be some sort of bullish flag. Confirmation is that if we break above these highs back up here, we break back above 160, then we're probably going to race back up towards these highs back up here. So I forgot to mention that. There you go. I just mentioned it. Quick look at Apple. I know a lot of you guys love Apple. Apple's actually a bit of a tricky one because we've been rallying up for quite some time here, like here. So we've got this major lower low through here. So we could be getting ready for another strong leg down out of Apple. Yeah. Looking at Amazon. Amazon's one that I've been watching as well too lately as well. Look how ugly this stock is. Look at Amazon. Yeah, it's very, very, you can see how it's very sluggish. Like we're not really getting a lot of movement at all out of this. We're just, yeah, it's just very, very, very sluggish. When it's not, there's no strength in that move there. Netflix, another one. This chart here. All right, so Netflix is, again, look at that there. Just no strength, right? There's no, this last couple of, or this last month, guys, everything's just gone sort of, damn. Boeing is sort of just, I'm very bearish on Boeing. I'm bearish on Boeing because I really think that this is going to be some sort of top. But you heard that word there, right? Think. Definitely not a trade for me. I wouldn't trade it. I never trade based on what I think anymore because whatever I think is always wrong. Whenever I just stick to my trading system and only take those, I take 20%. I take 80% less trades, or I only take 20% of what I normally would, and I make more money. I love it. I never take a trade based on what I think anymore. I used to. Slow grind up to keep stopping out shorts. Yeah, trade doc. That could be happening as well too. So and when you start to see a slow grind up on these markets here, like it's a slow grind up, that's actually pretty bearish, you know, because what tends to happen is just like it did back here in October, right? When you get a slow grind up, it can form some sort of topping pattern at that time, and then we get a nice strong correction out of the markets because it's not strong movement. It's not strong moving up at that time. Now, the flip side to that is it's slow. It can keep slow grinding up for a long time. That's the flip side to that. So let me go to last Thursday was a bull trap trade doc. It could be a bull trap, but as I was saying before, Money Maven, right? We need to be flexible, right? We've got to be flexible with the market and then flow with it. Let the market tell us whether that it was a bull trap, because the market still is in an upward trend. The buyers are still raising their prices. We're still creating higher lows and higher lows. So no matter what we think, hope, or fear, the market is still creating higher lows right now, which simply means the buyers are still raising their prices, and then that's all that matters. That's the facts of what's happening right now. And trying to say that this is definitely going to be a short-term top in the market, or even some sort of top in the market, is very, very risky. You don't see that in the charts. Last Thursday, there was nothing but bearishness in the charts. Then came Friday, and the trap was set. Once again, Money Man, once again, we'll see. It could be a trap, right? It could be a trap. But it's not going to take us long to get back up to there again. The 52 is barely rolling over. Now remember, the 52 is more like probably a couple of the 52 is more like a what would you say, that 60 days. So it's more like a 2-month type of moving average than anything else. So that's what we're looking at there. So, and the direction is definitely the direction of the moving average is definitely something you want to keep an eye on for. But just because it hasn't started rolling over yet doesn't mean that we're not going to start to see a pullback in the markets. But as I said before, actually the Dow Jones here, this is where the Dow Jones is, and actually you can see, right, the moving average is still pointing up. We're still creating this sideways movement. We could be getting ready for an upside, guys. And that's where, like, whenever we're in these time phases where the market's just going sideways like it is in the Dow Jones, it's very unpredictable, right? You never know where it's going to break. But wherever it does break, if we get a strong break, then that's where we're likely to start to see. But it needs to be a strong break, not some sort of weak break, because then it could be a false breakout and all those other things could start to come into play. On the Dow, Apple also failed at the 200 moving average. Yeah. It created that major lower low on that weekly chart. So it could be getting ready for another sharp leg down. I went to cash at the peak, at the open to wait for indecision and the setup to occur. Cool. IMV was a weak rally today. All the markers were pretty weak today, apart from, actually, yeah, all the markets were pretty weak today. There was no markets that were strong today at all. And that's where it's creating that, like, are we getting ready for a rollover here in the markets? Time phase. When you trade options, where do you set your stop loss? I set my stop loss according to my trading plan. Mini? Yeah. So according to my trading plan, according to where I always place my stop, that's where I place my stop. I look at the Dow chart and it's screaming huge drop imminent. Not necessarily, Ben. A time phase where we're just going sideways, like it is right now, especially after a big bull run, could just be getting ready for another big bull run. So not necessarily. I'm going to short with leverage. I wouldn't do that if I was you, Ben. Because now you're trying to make money on one single trade, and long-term successful trading is never. Bo, hello, Ben. John will love your comment. Bo, I'm trying to be gentle in this in this session here, Bo. So I'm trying to be nicer. Sometimes I'm a bit rough on people. But I wouldn't do that if I was you, Ben, right? Because you may be right. Just say, for example, Ben, you do take a short here and the market does drop and you make some money. Yippee-doo-day, you got it right. Who gives a fuck? Right? All I care about for you, Ben, is what are you doing right now to build the foundation so you can make money for the rest of your life and it not be lucky because you got the top on one time. Because I guarantee you may do that today and you make money on that trade. And let's say, for example, the next trade you do the exact same thing, and then you make another, and then you make some more money. And then the third trade you take, and like, oh my goodness, you make some more money. Without any plan, you're now got lucky, right? You got this, right? Then guess what happens on the fourth trade? You triple up because you're the man. You've got this. You know what's going on. Not only do you lose all that profit that you made in the first three trades, but now your account is down 50%. Because you didn't want to take a loss. You didn't know how to take a loss. You were trying to be right with the market. You didn't want to be wrong. If you got out for a loss, then you were wrong. And it's a cascading downward effect. I see so many traders who made so much money. I'm not joking, guys. Hundreds and hundreds and hundreds of thousands of dollars in Bitcoin. Then to take that profit they made in Bitcoin, think they knew it all, and started throwing the money at the markets and lost all of that, plus their houses. Not literally, but almost, because they mortgaged their houses and they thought they knew these markets, they knew what's going on. They got lucky with Bitcoin and it was a disaster. It was crazy. So that's all I care about. So yeah, Bo, I did see that comment there, and I'm trying to be a bit more gentler on people because I understand what people go through as well too. Like I was there once as well too, and I understand how people view these markets. They think they need to be right with the markets there. There's no system there. They don't understand that when trading the markets, there's a win-loss ratio in every single system. That's how successful trading is done, and so on and so forth. And Mo Boney. Ben, fifth, I agree, but I'm not using leverage. Cool. You guys try to keep picking tops, and I'll just keep going with the markets. That's the reason why, guys. That's the reason why I get a 90+% success rate. You got to understand that. I don't trade a lot, by the way. I may only trade Sometimes only a few times a month, but I'm looking at the markets quite a fair bit. I don't trade a lot, but I have a high win-loss ratio. With that high win-loss ratio, it gives me the confidence to put on a fair whack of money per trade. And with that per trade and have a high win-loss ratio, allows me to do well from trading. I hope you can see what I'm saying there. That's what trading's all about for me. It's never about getting in because I hope and hope and hope. I just wait throughout the month. I'm trading the stock market, and then I'm also trading the Forex and futures. I'm watching the Forex and futures for about 5-6 hours every night. Trade the stock market in the morning, my time. And then I just wait and wait and wait. Some months I have no trades, and then other months I might have 4 or 5 really good trades and just crush it. Some weeks there's no trades, and then like last week was phenomenal. Last week I had 4 trades, and every single one of them was successful. I had one of those trades was a small profit, like a 25% return on my investment, and the other ones were really nice profits. Now think about that, guys. If you started placing a good amount of money, 20 grand per trade, maybe more, you can start to see how that happens, right? But the week before that, not last week, but the week before that, I had no trades at all. And then last week came because the FOMC, I had 2 trades on the FOMC day as well. So I hope you guys can see that this is the way, focusing on the markets and flowing with the markets. That's how you truly get ahead. If you seriously want to become really good at trading and make good money from trading at the end of the day, you need to have the confidence to put money on a good amount of money on per trade. And we just know that, right? But how do you get to that point if you have like a 60% win-loss ratio? There's no plan, there's no confidence, and so on and so forth. So I hope you guys can see that. My account just keeps growing because I don't actually trade a lot. Like you guys may realize, but as I said before, there's some months that I simply do not trade. Why? Because there is no trades. And once again, guys, I may be watching the markets for 5-6 hours, call it 7 hours, probably between 6 and 8 hours every day in total, watching the stock market for an hour or so, and then 5 or 6 hours on the futures and Forex market. And I might sit there the whole time and there's no trades. Come back the next day, no trades. Come back the next day, no trades. I don't care. Because I'm telling you right now, it's just that one trade, that all it's going to take is one really good trade for me to do. I'm not going to talk about numbers here because I'm not going to say and try to say that you're going to do the same thing. But it's all about that one really good trade, guys. Can make one really good trade per month can make more money than most people make in a year. And I'm not talking about placing $100,000 trade either. Think about it, guys. Think about it. If you were trading options and you waited for one really good setup and you placed, I don't know, a $20,000 trade, and before you know it, you had a 300 or 400% return. You get what I'm trying to say here, right? Yeah. And if you look at one of my AFH trade, like I did this here, AFH, like this was a trade that I did here, right? And this one here, right? It was like, I don't know, something like a 600+% return. Do you know what I mean, guys? It's like, I didn't know that was going to happen. And that's my most successful one-day trade ever, by the way, ever. So, and I don't think I'm going to get a trade like that again in a while, but I'm just trying to share with you that was my second. My first trade was a break even. I took a GDX trade. That was a break even. This one here was a major profit. And then also, I just recently got out of another trade just recently. This was AMD here. AMD, I got out of a trade here just recently for close to 100% profit. But it's just a short-term trade, just in and out really quickly. And that's all the trades that I've only taken this year on the stock market, guys. Like that's all that I've only taken 3 trades on the ETFs and that side of front. One was a break even, and then the other one was a cracking home run, the most successful trade that I've ever done in history. And then this one here was just a nice profit, 80-90%, I think it was from memory. It was close to 100%, somewhere up there, close to 100%. And that was it, in and out really quickly, because I knew it was just going to be one of those style of trades. Didn't have to wait and so on and so forth. But I don't trade a lot, but I have a high win-loss ratio. And with a high win-loss ratio, I have the confidence to put more money on per trade because I know most of those trades work out. So, and if you look at that throughout the entire year, you could see, guys, that like I may only trade in total maybe a couple of dozen times, maybe 2 or 3 dozen times throughout the entire year. But I still kick ass, and my account still my account still grows, but I don't trade a lot. Literally most of the time, my account is flat. And I'm trying to share with you the mentality behind getting ahead in these markets if you want to get ahead in the markets. But for you to gain the confidence in the way you're trading these markets, to start to place $500 a trade, $1,000 a trade, $5,000, 10,000, you know, all these types of these types of that sort of investment there, $5,000, a $10,000, 20,000, you know, 50,000, $100,000. Like when you start to build up to those numbers, you need to have a lot of confidence in what you're doing there. But that confidence only comes from generally spending around about good 12 months on one simple plan, knowing exactly what to look for, knowing exact confirmation, and just getting better and better and better and better at trading that plan so well. So if you only had 12 trades throughout the entire year, just a dozen trades throughout the entire year, and you knew literally most of those trades are going to run on for a good profit, and you're doing $50,000 a trade, $100,000 a trade, guess what? Game over for you guys. You too could be a 7-figure trader just by doing that alone. You realize that, right? Most people are trying to trade a lot because they're trading with very small amounts of money, and they don't realize, but they're not building a strong foundation to grow the confidence. Because once you get to a certain point, and this is what happened to me, once you get to a certain point with your trading, guys, and once you get to a certain point with the way you approach these markets, once you get confidence, like a deep, like, wow, this really does work. All I have to do is wait for these type of setups, and I know most of them are going to work out. And you start to see this, and you start to, even if you're placing small trades, call it a $500 trade or a $100 trade, right? And you're doing this for 4 or 5 or 6 months, and you're seeing this and you're seeing this, and your developer's like, wow, this really does work. Wow, this really does work. All I have to do is be disciplined and patient and waiting for these setups. Wow. You know, imagine if I was doing that and I start to do $5,000 a trade or $10,000 a trade. Wow. I just took a trade just recently, and I'm not saying I did. As an example, I just took a trade just recently, and it made me 200% return. You know, trading options. Wow. And that stuck to the plan. Wow. Imagine if I had, 20 grand on that thing. That's a $40,000 profit. Wow. You know what I mean? And so you start, and that's what happens. You start to think like that. Now you need to have good risk management as well too. I'm not saying place 100% of your account on one trade. Never do that. Always have good risk management. But what you start to do is you start to sell everything off you can as possible to try to get as much money as possible in the account while placing a trade based on good risk management within the account. And then before you know it, everything starts to grow. But you cannot go from a $500 trader to a $10,000 trader overnight. It's a slow growth. You go from 500 to 1,000 to 3,000 to 5,000 for a while. Once you go to that, then you go to say 6,000 or 7,000 for a while. Once you go to that, then you go to 10,000 for a while. You know, then that's how you slowly grow. And before you know it, guys, because I have one mentor right now, and this all he does, he just looks at the market once a week. Once a week. He's looking at the weekly charts. He's looking for really, really good setups. He only trades probably half a dozen times throughout the year, but he's waiting for that 100% yes trades. And he hits them, and he hits them hard, and he makes multiple 7 figures just by doing that. Now he's in these trades for anywhere between 3 and 6 months, but he's waiting and waiting and waiting and researching, and he looks at the market once a week, where he's just doing his research. So maybe one day for 3 or 4 or 5 hours, he will do all these scans, he will do all his research, he'll go through the list and see what's happening and so on and so forth, and then he will just do that. But then I have another mentor who's just crazy. He trades 14 hours a day, and he's just, he does really well. So I'm trying to share with you guys how you what you're doing now, it doesn't matter, and it doesn't matter where you're starting with right now. In 3 or 4 or 5 years time frame, you too can do really, really well from trading if you develop that foundations in the markets. Make sense, guys? And if you develop that foundation now, even like when I first started, guys, I was $250,000 in the hole, $250,000 in debt. Now I didn't lose that money. I gave that money. I borrowed the money, then gave that money to someone else because I freaked out. And then he lost it, and I was personally responsible for it. But it was at that time that I really wanted to become a good trader as well too. I actually went to my coach, and he put me on a 6-month probation period where I couldn't trade live at all for 6 months. And I had to do these certain steps, which was like developing the plan or following his plan and so on and so forth. And it was the best 6 months ever because it developed that foundation. So when I did start to actually trade live, everything started to take off for me. All right. So anyway, guys, let me continue here. Bo, you keep retracting your messages, Bo. You're funny. Nick, hey John, I just wanted to say all the education is highly appreciated. Thank Nick. I appreciate that, champion. John Howe rocks. Thank you. Adam making. City. Oh, that's the bank. City. Thank you for that free $1. Canadian banks, Wells Fargo. Yep. I shorted the Russell at the 15, just a day trade. Cool. Look at Barrick Gold. That chart is beautiful. Now breaking out after 8. Barrick Gold. Barrick Gold. Gold. Is there a code for that? Money Maven? Is there a code for that? BARR. Oh, here we go. Barrick Gold. Oh, there we go. Look at Barrick Gold. That chart is beautiful. Just now breaking out after 8-year bear market. Oh, it's not breaking out, not just yet anyway. We're trying to break out right now. But we're still in a nice lower high. We're in a bit of an indecision right now, but we're definitely not breaking out, not yet anyway. Like we're trying to break out, but there's all these levels of resistance up through here. This is actually a really good question here. Jesse says, what is making the market go up? Everything is way below the highs. I don't understand. Is it biotoc or something? What you got to understand, Jesse, and this is something that when it comes to getting ahead in anything really, is instead of asking why it's going up, because no one knows really why something is going up or why something is going down. Now, some people say when they hear me say that, oh, bullshit, John. Oh, bullshit. No. It's like we don't know. Is it insider buying? Is it insider trading right now? Is it maybe something's going on with inside that company where they're trying to pump and dump the stock or something like that, right? We never know exactly what's making that market move. That's the wrong question to ask, Jesse. Because who cares what's making this market move? Or the question you should be asking is, how can I develop a trading plan that I can stick to every single time that's going to make me consistent profits overall? That's going to give me a really high win-loss ratio. And yes, I'm going to have my losses, but I know if I take 20 of these trades, 90% of them are going to be successful. That's the question you should be asking yourself. BA South Plane had an emergency landing a few hours ago, bad engine. Yeah, there's actually a lot of stuff happening with BA right now. Yeah, I see this thing being a bit of a blow off top here. So we shall see. We shall see whether it's gonna continue down or not from here. All right. So Paleo, what are your thoughts on Facebook, John? Bearish. Oh, Facebook. Let's have a look at the FB. So we're looking at Facebook here. Okay, really interesting what I'm seeing here on Facebook, right? So what I'm seeing here on Facebook is this. Let's go to here. All right, I need to. So I'm seeing that sort of action happening on the weekly chart. So we're definitely at that level through there. We created this significant lower low through here, and that's not by accident, guys. Okay, that's not by accident. There's a higher low, lower low. This could be some sort of lower high through here. So if I go to my daily chart now, and let's go to say the 6-month view again. 6 months, squeeze it up. We're definitely stuck in this sideways range, aren't we? We're stuck in this overall sideways through here. So we had a move up, a bit of a gap up, and now sideways. So this sideways movement here is time. Okay, it's time. And so therefore we've had this point through here, and then also this point through here. We're just going sideways right now. So once again, it's doing what basically the Dow Jones is doing as well too. We're just going through this sideways movement here. Now, depending on what happens through here, let me bring up the candlestick chart here for a minute. I'm going to bring up this here. So depending on once again the depending on where the breakout is going to happen, because we're getting a nice little higher high, and the moving averages are now definitely starting to point up. So if we get a strong, and this could happen, and again, guys, it's back to this if scenarios, right? Because you need to, right now, we don't know where it's going to break out. But the if, I know some people hate that, right? But the if scenario is that we need to, if this happens, then this is likely to happen. And that's what we trade. Okay. So if we get a nice breakout candle, like a very nice, strong breakout candle here, very nice, strong breakout candle. Because we're being going sideways with all these small candles sideways equals no one in control. There's no one in control there. Okay. Sideways, indecision. Your guess is good as mine of where it's going to go, right? But when the market starts to show us a strong breakout candle, and especially if it's to the upside, because now we're starting to change some trend through here, then this is probably going to race back up and close this gap up here. But on the flip side, we do have this major significant lower low. So that could be the precursor for another leg down on this weekly chart. So the flip side is true. If we get a break down from here, then we're now probably likely to race back down towards these lows around, even the market loves even numbers. So around 130 would be that's where the market, that's where Facebook is likely to get down to. So it's the if scenarios, right? The if is wherever the breakout has happened, that's where we're now likely to run. If we break down out of this here and a strong breakout candle, we're now likely to run to 130. If we get a nice strong break up above this here, we're now probably likely to run back up to 210, somewhere around about there. This gap here, and so on and so forth. So yeah, good old Facebook. Jesse B says, just waiting for John to rip me. Jesse B, I am no longer wasting my time with you, my man, because if you are not going to participate in your own rescue, if you're not going to help yourself, then I'm not going to waste my time trying to help someone who just wants to keep doing the same thing over and over again and expecting a different result. So I welcome your comments, my friend. I welcome you in the chat box, but as me trying to help you, I think 11 times I've said the same thing to you, but If you want to keep sucking at trading, then you just keep doing the same thing. That's your choice, not mine. The bear market is so slow. It is if it's waiting for another major catalyst. In the meantime, it's a 10-year-old bear market or bull market. Viagra. Yeah. So it's interesting, you say that. By looking at the markets right now, it's not really a bear market, is it? What constitutes a bear market? Let's just look at the facts, not what we think or hope or fear. What constitutes a bear market? Lower highs and lower lows, right? That's what constitutes a bear market, a downward trend. Now, and what I mean by that is this, right? Let me bring up we'll bring up this one here. Bam. Right. So a bear market is what? Lower highs, lower lows. Step down. So that's what a bear market is. A bull market is higher highs and higher lows. So right now on the short term on the charts, we're more in a bull trend right now than anything else. Why? Because higher low, higher low. S&P, same thing. Higher low. This could be another higher low, and we're getting ready for another breakout. So this is actually not a bear market right now. This is actually a bull market, and that's not what we think. That's just what the market is telling us right now. And so the only thing we can make an opinion on is what the chart is telling us right now. And then every single day that a new candle is developing or does develop, then we need to look at the market and say, okay, has the tune changed? What's going on today? Next day, come to the market. What's going on today? Are we now going through a bit of a sideways phase? Are we going through a bit of a time phase? Are we changing trend? And all that down home country goodness in the markets. So we're actually in a nice bull trend right now. And this could be getting ready. Same for the S&P. This could be getting ready for a nice move up. Used cars are doing horrible. The leases are rolling over because of price. Yeah, I'm telling you right now, guys, the car leasing industry, especially the last couple of years, I'm not sure about now, but the last couple of years, they've just been basically giving away cars. I know that for a fact, guys, because like the car that I'm leasing right now, true story, the car that I'm leasing right now, I went and had a look at it. I like the car, so I'm leasing it through my business. And so what I did is I filled out some paperwork, basically said what I was making through the business, because I have everything set up through a business structure. And what ended up happening was when I actually went and did the paperwork, I said, this is how much money I'm making, average per year or per month or whatever it was, per week or whatever it was, and here's my details and, ABN and tax file number and all that sort of stuff. And so obviously they needed me, and then I needed to go to my accountant, right? And I need to get my accountant to send me all the details to show them the proof of everything, right? And then I'm not joking, like the next day, they called me up and they're like, "Oh, you've been approved." I'm like, "You haven't even seen my paperwork yet." Like, "Oh yeah, well, we checked your credit rating. Your credit rating looks pretty good. So, you're approved." And I'm not talking about some cheap car here, by the way, guys. It's not like a $5,000 or $10,000 car. It was, and I'm just like, and I said to the guy, I said, "But I haven't shown you my proof of income or how many years I've been in business for or all that sort of stuff." And he just said, "Well, you've been approved. The bank said it was good." And this is a couple of years ago now. And he goes, "Well," and this is one of the major banks here in Australia. And they said, "Well, you've just been approved." I'm just like, damn, I didn't even have to show my paperwork and I got approved. This is not a good sign. Now, I would have got approved either way, but just to show that these cars were just going out flying off the shelf with people that are not even proving their income. Because I didn't. I had to go get the document from my accountant. So you don't make a lot of money with depreciating assets. You can, Paleo. You just got to, you can short it. You can short it and then you can make a lot of money with that. Jesse. I didn't get your email, Jesse. I didn't get your email. Howell, Howell. This is the email here, by the way. howtrader@gmail.com. If you are interested in joining my coaching program, by the way, guys, where you get my #1 trading strategy, that every single week I'm coaching you to get better at that, then you can just send me an email to that and I'll see if I can do something for you. If you ultimately think that the market is going higher, Activision Blizzard is a beat up stock and could go way up. There you go again, Jesse. Still trying to pick those bottoms, aren't you? You will never learn. Barrick chart is a breakout. I don't see. Cool. Hey, John, I just got to say that this noticed that, say this. Notice you're a cancer survivor. Props to you, mate. That's amazing. You're an inspiration. I can only hope to be as good as you someday. I hope that day comes soon. Paleo. Firstly, I appreciate that, man. Don't put me on a pedestal, okay? Don't be put on a pedestal. I'm no good as anyone else. You know, and my life's not perfect. You know, I have my, when this camera turns off and what you see, I have my personal shit going on as well too in my life, guys, and you know, and that sort of stuff. I am a cancer survivor, but you know, and I'm a natural cancer survivor. I didn't do any chemo or radiation or anything like that. I'm a natural cancer survivor. I went to the source of what was going on and then I fixed it that way, basically. Now, disclaimer there: if you are sick or something like that, go seek professional advice. But don't put me on a pedestal, Paleo. I'm no good. I'm no better than anyone else. I really am not. It's just the things that I teach is stuff that I live by. I understand. And when I say things like in the markets and trading and stuff like that, you know, it's only because I've gone through so much fucking heartache in these markets that it has really, really, really caused me to know what's right and what's wrong and what's really going to help me move forward every year instead of spinning my wheels. You know, like I'm not joking, like, you know, whenever, you know, my hair's starting to go gray, whenever, you know, my beard, whenever I start to grow a little bit of a beard, I can see gray in my beard. It's just like, I've gone through so much hell and back, personally and professionally, that I started to realize what the things that's going to help me continue to slowly move forward and the things that are not. And the things that are going to slowly help me move forward, I just got to keep doing. And it's not always the easiest thing to do. But it ultimately just comes back down to two choices. We have two choices in life. Are we working hard right now to develop that foundation and to keep moving forward? Are we not? In the past, I'd have my trading setup that I'd look for, and then I'd trade everything else that I thought was a good idea or something like that. Trying to be right with the market and so on and so forth. And then I realized after so many years of doing that, hang on a minute, I'm going backwards by doing this. I'd make money with my system, but then everything else I'd do badly and so on and so forth. So it was not until then that I had to start really just focusing on my consistency, discipline, and patience with trading just that one setup. And again, guys, that one setup could be anything. It could be a bull flag. It could be a setup, you know, it could be whatever, divergence or whatever. That's why I say if you want a good setup, you know, I can teach you that with my coaching program, but it's not me. If you trust someone else, go to him, go to them, right? Invest in them. If you believe in what they say and you believe in them, go invest in them, but find a plan. Because 10% of your success comes from having a setup, and then 90% of your success comes from how consistent you are, disciplined, and especially patient to waiting for that setup. Trading is simple, it's easy, it's fun. It really is. All I have to do is sit in front of the screen as long as I have to until this setup appears, take it. Most of the trades are going to make money. The end. But what gets in the middle of that? What gets in the middle of that white space where there's nothing happening? You're frustrated. You watch the markets go up and down, right? You think you're missing out, so you're fearful of missing out. You haven't had a trade for a couple of days, so now you're getting a bit itchy. You know, you want to be making money, right? So if I'm not trading, I'm not making money. So you go to place a trade, and now you're losing money. And now you're saying, I wish I was just back at break even. and then suddenly, like, it's like, damn, The amount of times that I went and worked and took money and saved money and then put that in the trading account and blew it up. Oh, I did that many times. At least 3 or 4 times I did that. And I'm thinking, man, I'm such an idiot. Why do I keep doing this shit for? And then I realized it was never the markets. It was never the markets. It was always my ability to have a good trading setup, know exactly what I'm looking for in that trading setup, be consistent, disciplined, and patient. And when I did that, I stopped trading a lot. I only trade very select few trades, and my account started growing very nicely. So trading is very relaxing for me right now. I don't ever get now I understand if you're new and especially if you're watching if you're watching short-term charts like the 2-minute chart and the 5-minute chart, especially on the Forex and the futures markets, and you're watching these things take off to the upside and take off to the downside. It's like, wow, wouldn't it be good to jump on that? And wow, wouldn't it be good to jump on this? And, it's like, and you see these really big moves like, oh man, it'd be so good to jump on that. Why didn't I get onto that? Oh, I'm such an idiot. And all these things. I've gone through all that process. And now I'm just like, well, no, I didn't miss out on anything. The market didn't give me a setup. I haven't got my setup. So whatever the market's going up or down, I'm not missing out on anything. Because I have taken so many damn shit trades based on what I thought, hope, or fear, that those shit trades that I've taken in the past have caused me so much pain that now I link so much pain to taking shit trades. Because I know if I take a shit trade, if I take something based on what I think, hope, or fear, I am definitely going to go backwards. 100%. I may make money every now and then, but I'm definitely going to go backwards. So I link so much pain right now, guys, to taking something I link so much pain right now to taking shit trades, to taking something that just looks good on the chart and so on and so forth. And I link so much pleasure to waiting for those really, really good quality setups that can just rock it out with my socks out. Rock it out with my socks out. And sometimes they're really short-term trades, and sometimes they're like they're nice big moves, right? So he was just a short-term trade here, right? In, out within a couple of bars. This is a 2-minute chart. In, out within 4 minutes. Right? Really, really just. Here was another trade. This one was a beautiful trade. This one here. Look at this one here. Took off. Right? This breakout candle here was my confirmation. Write it up. Came back down. Stopped me out. Nice profitable trade. All right. So there's a lot of things there, guys, that. Yeah. This one here, this is an NQ 2-minute chart, right? Look at the breakout candle. And then actually this one here was quite a nice run, quite a nice ride to the upside. In, out, in, out. Just waiting, guys. That's all it is. It's waiting for my setup. That's all. John, what do you think of BNFT? Man, I've been going for an hour and a half on this thing. I must have had a good sleep last night. I actually did. So I'm feeling pretty relaxed today. BNFT. Let's have a look at the weekly chart. We're in a very strong upward trend. We're definitely at these level of support and resistance through here. I don't really have an opinion on this, but if we get some sort of a strong breakup out of this here, then this could actually race back up to this, could at least come back up and close. If we get, there's that if scenario again, right? You've got to create that. Sideways, we've got an overall big stair-stepping upward movement through here. So if we get a very nice strong breakout candle like that, like a very nice strong up candle with a very nice volume spike behind it, then we're probably going to race back up towards these highs back up here. But you'd want to see that first. You'd want to see a very strong breakout candle, have good risk management because it could completely, and then at the end of the candle, and then if that happens, then it's now the market's telling us we're now likely to probably race back up to $60 there. But even if that does happen, if you do trade something like that, I'm not telling you to trade that, but if that does happen, just remember that that it could also, if you do get on something like that, it could roll over and stop you out. So you need to also factor that in your risk management as well too. Always do that. But it's never about that one, about that one trade. But I'm telling you right now, rough send. This setup that I'm talking about here, where the market was in a big, nice upward trend, it's pulled back to support, gone sideways with all these small bars, and then a breakout bar. If you get a big, strong breakout candle, looks like that, and a big volume spike, and it's got room to run to the next resistance, you take that, you'd be making money 8 times out of 10. And the other two will come out and stop you out. If you're trading options, then the options will make you the options would do anywhere from say 50% as much as to a couple of 100%. Trading in the money options. And when your losses be anywhere between 30 and between 20 and 30, 20 and 40%. There you go. I just gave you a successful trading setup, guys. Successful trading plan. But that's 10% of it. How many of you, I just gave you a successful trading plan, but how many of you are willing to wait for those setups? What if you don't have a trade for 3 months like that, but then you do jump on the next one and the next one gives you 200% return? Oh, what if you had 100 grand on that thing? So there you go. That's what successful trading is all about. Hunt big day trade. HUNT. Damn, guys. An hour and 40 minutes. Damn. I've been rocking out with my socks out. Yeah. You know, didn't I tell you that, Paleo? Paleo? Didn't I tell you that this was going to happen yesterday? I told you Hunt was going to make a big move, but you just didn't listen to me, did you? Just didn't listen to me. I have no idea what's going to happen. Interesting. The interesting thing I like about this, guys, is that the market was actually, like, obviously I didn't trade this, but the interesting thing is that look at all this here. Look at all these just absolutely small bars. And then it had this big breakout bar first. And then the big breakout bar caused that. So 400% return on a stock trade. Does that have options on it? No options. Damn, that looks pretty good. But as you can see, right, it was this breakout candle here that was the sign that this thing's probably like to have a nice move. Especially because you can see we had all this sideways movement here for quite some time. And then the big breakout candle was that thing there, right? Look at all that. Look at all those small candle, and then a big breakout candle. That was actually the sign. Now, you didn't know it was going to go to 100, but that was the sign that something was going to happen with this stock, and then bam. So I like that. Hunt. I'm actually going to take a screenshot of that. I like that. I'm going to save it in my Hunt daily. Hunt daily. Like that. Alrighty, guys. Well, that is it for me today. Wow. An hour and 40 minutes. Had a really good sleep last night, guys. So I'm feeling quite calm and relaxed and energized. So I think that's why I did a lot more today. Yesterday I was quiet. So anyway, guys, that's it for me today. I hope you enjoyed today's session. Leave a comment below if you want. Give me a little thumbs up. Go from there. And guys, I'll see you guys next time. All right, guys, take care.